I think we'll go ahead and get started. I'd like to welcome everyone to this webinar session, Reporting Reconciling Assets to General Ledger. This morning what we are going to cover, we're going to talk about the current theory of reconciliation per Oracle. We'll talk about how to reconcile Oracle assets to the General Ledger, the reconciliation process, and then we're going to talk about a solution to automate that process. So if we look at the reconciliation theory, Oracle has what they call a pyramid theory approach to reconciliation, top-down approach. What this means is that you start at the high level, you generate multiple reports out of your fixed asset system and out of your general ledger system. If those reports
has left the conference,
in theory, you're done. If you have other issues that you need to reconcile, then you could go ahead and run the next level of reports, which are your detailed reconciliation reports. The difference between your summary reports and your detailed reports are that the summary reports generate a summary by account of what your activity was for your fixed asset system. So those reports will give you a beginning balance, your transactions, additions, cost adjustments, retirement, and then give you an ending balance. And that ending balance is what you're going to reconcile to the general ledger. On the detailed reports, gives you the same information, a beginning balance, activity, and an ending balance, but it breaks it down by asset. So if you find yourself in a situation where you're not reconciling in a particular account, you can run the detail and find out which asset or assets are not reconciling. If you're still having issues with that, you could go ahead and run individual transactional reports, such as your additions, cost adjustment, retirement, transfers, reclassification reports. Each one of those reports should tie out to the column on your summary and detail reports for that type of transaction. So that's the approach Oracle looks at it.
Has joined the conference.
What this allows is that an individual user does not have to run 15 reports, all the transaction reports up front to reconcile. What they can do is start at the top at the summary level and then work their way down if need be. So when we look at the reports that are involved on a fixed asset side, at the very top level is your asset summary reports, which consist of your cost summary, your CIP summary, and your reserve summary. And again, those reports are by cost center and by account. If for whatever reason you're not reconciling at that level, you could go down to the detailed reports, which are the same type of reports, your cost, CIP, and reserve. The only added level of detail on the detailed report is the asset level. So this will report down to the asset level. So if we look at the reconciliation process, and before we get into exactly what reports are being generated out of general ledger and how to reconcile, some steps that you could take to reduce errors and minimize the risk involved in reconciliation are the following steps. One is to freeze your asset journals, and secondly is to create security around your asset accounts. And what this means is, what I recommend in any environment that you are utilizing subledgers is that you freeze your subledger journal entries when they come into the general ledger. And what that simply means is once they're created, no one can update those journal entries. If you allow people to go right into a subledger, create a journal entry, and manipulate it, that is a very easy and quick way to get out of sync between your general ledger and your subledgers. The second step that you could take is to create security rules around certain accounts, and we'll walk through how that is done. The first one is to freeze your journal entries, and we are freezing at the asset level So under my journal source, I'm going to query up all of my sources that Oracle has, and we can see here that we have the asset. And all I'm going to do over here is check this box. This is Freeze Journal. And again, what this is going to do is when Fixed Assets creates their monthly journal entries into the general ledger, no one can update those or manipulate those. Those are frozen. And again, I would recommend to do this for AP, AR, cash management, whatever other subledgers you guys would have. Creating security rules. The main purpose of this is to not allow manual journal entries to be booked to accounts that are reserved for your subledger booking. So if I have asset cost accounts, those are accounts that should be used only by fixed assets. No one else should be booking manual journal entries to those accounts. We could freeze those accounts and set up security rules to not allow anyone to book journal entries to those accounts. Okay, I would recommend that. Again, if you fall out of reconciliation, one of the first things I always check on the GL side is, did anyone book a manual journal entry? So the logic is that you have accounts that are preserved for your subledgers. Those accounts you could create security rules around to not allow any type of manipulation by other journal entries, manual journal entries, spreadsheet journal entries to those accounts. So the first thing we're going to do, we're going to allow at the value set level security. So we're going to set this to allow security. At the accounting chart of account segment value, we're going to allow security here as well. So in this segment, we want to set up security. And then we're going to create our security rules. And if you're familiar with general ledger cross-validation rules, the way you define those are similar to how you would define a security rule. So what I'm going to do here, I'm going to identify that someone does not have access to fixed asset accounts. I'm going to include all my accounts, and then I'm going to exclude the asset accounts. So this first range will take care of my asset cost accounts, my CIP accounts, and my accumulated depreciation account. The second line will take care of my depreciation expense account. I don't want anyone to manually book journal entries to those accounts. What I would then do once I create that rule is I would link that rule to a responsibility. So all of my people in this particular organization who has the right to create a journal entry will have a responsibility of general ledger user. I am going to link the security rule to that responsibility. And what happens is when they go in to create a journal entry, if they attempt to use an account, they'll get an error message that you do not have access to book to this account. So they will not be able to book that journal entry. So those are the two steps that you could take to reduce outages between your subledger and general ledger system. Is first by freezing the journal entries, and second by creating security rules around subledger accounts. If we look at assets and general ledger and the reports that are required, again, this is just identifying the multiple reports in each tier of that pyramid. We talked about the summary reports and the 3 summary reports, same with the detailed reports. The transaction reports are the ones below, the additions, cost adjustments, retirements, reclass, transfers, and so forth. So there's many transactional reports that you could drill down into if you have a reconciliation issue. On the general ledger side, you have a choice. You have 1 of 3 reports that you could generate. You could generate a trial balance report in order to use to reconcile the fixed assets, a detailed trial balance report, or the general ledger 132 character report. The difference and really it's personal preference of how you want to reconcile on the GL side. If I run any one of the trial balance reports, it's going to give me every single account and every single combination and the amounts associated with those. which is a fine report to reconcile to. It's just that you have to weed through and pick out what accounts you need to reconcile to your fixed asset. So that's one downside to generating those reports for reconciliations. It's giving you everything on the GL side when you only want a small number to reconcile to. The general ledger report, the downside of this report is you may need to generate multiple general ledger reports to reconcile a fixed asset. What I mean by that is that when you run the general ledger report, you identify the account range that you want to be produced on that report. And depending on what your account ranges are between your asset costs, your CIP accounts, your accumulated and your depreciation expense accounts, you may need, if you just want to have a report just for those accounts, you may need to generate multiple reports for each one of those account ranges. If we look at the process of reconciling, the first one is to generate your reports out of your fixed asset system. Again, I'm looking at the top down, so I'm going to reconcile my summary reports. I'm going to generate my reports from Oracle General Ledger. So again, I could do my trial balance report, which includes all accounts, then with my trial balance detail report. Or I could do multiple reports of my General Ledger 132 based off of my account ranges. So I'm going to do one for my asset cost, one for my reserve, one for my depreciation expense, and one for my CIP cost account. Once I have those reports, I need to match them up. So either I'm going to go through manually and tick and tie them, or I'm going to run through the process of downloading the text reports, uploading them back into Excel, and then running some type of VLOOKUP or some type of program to reconcile it and see if I'm in balance or out of balance. And then again, if I'm out of balance and it's needed, I would run the next lower level reports out of fixed assets and do the same thing. The next couple of slides are just going to give you a picture view of what Oracle has as far as each of their reports and reconciliation. The gray picture is from R12. The blue pictures are going to be from 11I. So again, you can see the pyramid that they recommend too. You have your asset summary down to your details, down to your transactional reports. And you have one of these pictures views for your costs, your clearing, your CIP costs, CIP clearing, reserve, your depreciation expense. Okay. One thing that we wanted to, what I wanted to put into the slide show, we're not going to walk through every single one of these, but this is if you want to go out on the website and pull down this presentation, you'll be able to see every single standard report that Oracle has, the name of that report, and a description of what that report will generate. So these next slides just gives you all of the seeded reports out of fixed assets. So we turn to reconciling Oracle fixed assets to the general ledger and introduce an automated way to reconcile. Instead of creating multiple reports, downloading them as text files, uploading them back into Excel, and then manually ticking and tying or running a VLOOKUP, I want to eliminate those processes. The way that we eliminate these processes is that we add a level above the summary reports called the automated reconciliation reports. And then again, we use the top down. If there's outages in the automated reconciliation reports, you can then drill down into your summary, your detail, and your transactional reports. What this automated reconciliation process does, it generates a report for each type of account you have. So it generates one for your asset accounts, your asset clearing, your CIP costs, your CIP clearing, your depreciation, your reserve, your depreciation monthly, and depreciation year to date. What these reports do, it will give you your whole accounting stream, your account description. It'll give you your balances out of fixed assets, the balances out of GL, and then any variances will be identified. Those variances are what will need to be looked at by the accountant. So it minimizes the manual effort to generate multiple reports out of two different systems, if you will, or two different applications, and picking and tying those. These reports will either generate directly to Excel, so there's no upload or uploading into Excel from a text file, or they could publish directly to PDF. So this is an example of an Excel report. Let me get to the PDF here. They may not put the PDF in yet. But this is your Excel report. This is your CIP cost report. Again, it's going to give you your accounting and then a description and then your balances for each of the ledgers. Your sub-ledger and then your general ledger and any outages. And you'll have one for each type of asset account. So your reserve account, your depreciation monthly, depreciation expense, your year-to-date. So the package of this automated process, you kick off one process. So instead of kicking off multiple reports, this is one process that will generate each one of these reconciliation reports, one for your cost clearing, your reserve accounts, and your depreciation expense accounts. And again, depending on how you are defined, your asset categories, and what accounts you use, you may not need all of these reports to be generated. If you use the same account for your asset cost and asset clearing account, you're really only going to use one of the reports. So that's why we have on there, if needed, depends on your setup. One other thing that is added into our process here is something that people have been looking for, is a way to reconcile your corporate books to your tax books. If you had corporate and tax books, we automated that process as well with a similar tool that will go ahead and create the same type of report, but it will match up your corporate additions to your tax additions and give you any variances on a monthly basis for additions, for cost adjustments, for retirements. So you can keep in sync between your corporate and your tax books. Those automated reports come in two flavors. One is at a summary flavor, which is based off your asset category. So by category, you'll be able to tell additions, cost adjustments, and retirements between your corporate and tax books if you're in sync or out of sync. Or you can run those at the asset level. So if you do have issues with that report in your periodic mass copy, down to the asset, you can find out which asset didn't get copied over to your tax books. Either the cost adjustment didn't copy, the retirement, or the addition didn't get copied. And then you can figure out why that is. It may be a known issue as far as that asset category is not linked to your tax books, and you expect that not to get copied over, or it could be something that the periodic mass copy did not pick up. It was confused on what to copy over to your tax book, so it aired out on that one transaction. So those reports will catch those issues as well. Another report that is built into this is a fixed asset extract report that at the time that report is run, it will give you in Excel format every single asset in your system that is active. And it will give you all of the details for that asset. It will give you the descriptive information, financial information, your distribution, your AP information. It goes down to the invoice, purchase order, project, task information. So any information housing the fixed assets on that asset will be dumped into an Excel abstract file for review, for auditing purposes, for whatever purposes you require. Do you guys have any questions at this point? Okay. If there's no questions on the reconciliation side of things, I'd like to thank you guys for joining. If you want to get a copy of this presentation, you can go out to our website and pull down information on this presentation and on any webinars and white papers that we have done in the past. You can go ahead and pull those down from our website.
Brian?
Yes.
Hi, this is Mike O'Connor. I work with Arlington County, and we use public sector it's basically a government entity. So we need to have both, and I think you were alluding to it, the corporate and tax books. So when it comes into our corporate book, fixed assets, it's being flagged as an expense.
Mm-hmm.
And then we do the periodic mass copy to bring it into the asset and asset clearing accounts. And I think we've found issues sometimes when we make a transfer or reclass in book one. And basically, first off, we have the GL is set up as an expense, and it's coming into the fixed assets as an expense, and we do the transfer. And when it comes out on the other side on a GL book two, we have that mismatch. And am I to understand that this is something that might help that process?
Right. Once, and you guys do that through a periodic mass copy?
Yes. Mm-hmm.
Okay. One way that you can really, what a lot of people miss with Oracle and the periodic mass process procedure is when you run that process, even though it looks that it completed and it looks fine, you always have to look at the log file attached to it or the output of it, because that process has what I call good and bad errors that it will list out there. A good error could be that you did some type of adjustment to an asset that should not have been copied over to your tax book. So you adjusted the depreciation method or the depreciation life.
Mm-hmm.
That type of information will not get copied over to your tax books, but it will be identified in the log. And that's a good error. A bad error is you did some type of transaction and Oracle is saying this transaction cannot get copied over. And when you usually see that, what usually takes place is if you do multiple transactions to a single asset, and those transactions are similar transactions, so if I transferred an asset 3 times within one period, when I do that periodic mass copy, Oracle gets confused on what to actually copy over.
I see, right.
And
I think we've seen that issue, with having an addition and a transfer in the same month.
Right. So those should be noted out in that periodic mass copy. The periodic mass copy is not going to air out. It's going to look like everything, like any other report that is completed normal. But that log is the key to show you, what issues it thought it had, and then for a person to go through those and say, okay, we need to manually do this for this book now because Oracle couldn't do it. And that's what is required. What ours will do is if someone forgets to review that log, it's a safety net. It will show you right away what didn't get copied over. So you retired, 3 assets on your corporate books. You did the mass copy. When you run our reports, only 2 assets show retirement. so you know exactly which asset did get retired. And it will show you that immediately at the asset level, if someone forgets to view the log. And a lot of people do. That is something that is not publicly out there in any document that you must review that log. But that is a fast way to get out of sync if that log is ignored.
Right. Okay.
Does that help?
That's good to know. Thanks.
Okay. Yeah, I mean, dealing with that stuff. I've done it with dealing with Oracle, gosh, since release 9 characters, so I've seen it all. I think. Maybe I'll be. But
Well, we have our. Yeah.
Are you guys on 11i or on 12 now?
No, we're still on 11i, 11.5.10.
Okay.
Yeah,
And we're compatible
we have
with either one.
Yeah, we have our own set of challenges just with, bringing assets, getting assets into the mass additions table, since we don't bring assets in with, setting them up as asset clearing accounts in AP. We have to have that a little bit more customized, because we were actually bringing them into book one as expenses.
Right. There's a flag in AP.
Right, exactly.
That the track is asset flag?
Yep.
So you guys are utilizing that?
We are, yes.
Okay.
Right.
Okay.
Yep.
Because when you say customize, I'm thinking if you check that.
Well, we have a program that actually picks up certain expense accounts.
Okay.
So that if those get picked up or included in the process, they will flag the track as asset flag.
Okay.
But I think we have also issues, and I just started a little, it's been a little while, but and I think I used to get stuff when I was over at the American Red Cross too, which we didn't have the issues there that we have here, just because we have these multiple books, and it's just the transfer in between the two books, and because we're going from expense to asset, it just seems like we have issues when we transfer or reclass assets in book one, and the information gets passed over into book two, and they become an asset that sometimes it's, I think for the accountants, it's been more difficult to tie out, and I'm looking to offer them a little relief here. So I'll definitely look more at that periodic mass copy process. See what's going on there. That seems to be a big key.
Yeah, that process is, and like I said, what we offer just on the reporting side. So until that process, even if you look at that process, what you would have to do to reconcile out those books, anyways, whether that process is working or if you have issues with it, is you still have to run multiple reports. You would have to run your additions, retirements, and cost adjustment reports for each book, and then manually, tick and tie and make sure that they reconcile. Where that's where our bit would overlay that multiple running of reports and manual ticking and tying, that we just give you what your balances are and any outages. But still, you would still have to get that periodic mass copy process working for any report and reconciliation process to be clean.
Okay, thanks.
Okay. Thank you, sir. Any other questions? Okay. Well, thank you for spending your time with me this morning. And feel free to contact us if you have any further questions.
Okay. Thanks a lot.
All right. Thank you.
Bye. Mike O'Connor
has left the conference.